Alright guys, let's see here, let me get all the windows open. Chase with ethical trading. Gonna do a quick chart review on a few tickers based on requests. Let me get my Discord open on this other window. I'm gonna jump over to SMC real quick for these while other people are joining. And y'all can drop requests for charts for certain tickers either in the YouTube live chat over on the side there, or you can actually drop it in Discord lounge. Either one's fine. I'll go through some of the main ones that we currently are checking against, and then touch base on any others that people request in the meantime. So, see here. SMCI, so looking at the weekly, right? Still same bear flag action going on here. Go to the daily. You can see we got the same setup going again, bear flag, breakdown, bear flag, breakdown. What I'm watching for here, again, I won't take long positions on it, but what I'm watching for here is for yet another breakdown. I would keep an eye on potential inverse head and shoulders here. A shoulder, head, shoulder. We need to see a breakout of volume and confirmation above this 474 level for the bullish trade there. For me, the risk is still high because, like right here, there's a minor resistance that you could run into. Mark that set. Each has it. Then from there, there's so much risk to the upside on SMCI here that for me it's not worth it to trade calls to the upside. The premiums are insanely expensive. There's too much downside risk here. If it breaks down, it's going to the 352 level. So I'll drop the actual separate charts in the morning over in the SMCI specific ticker channel on the Discord so that people can reference those. Reply real quick. And so there's minor levels of resistance support. I typically don't like to trade SMCI earlier in the week just because the premiums are high. Beta decay gets insane on them, so I don't mess with it early on during the week. I'm gonna jump over to Apple really quick. Let's see, so Apple, okay. Over here on Apple, zoom out and go to the daily real quick, then we'll work our way down. I've been hesitant on Apple just because almost all the Apple events, releases, or things like the iPhone release, same thing happened last year. And I say this as an iPhone user, I literally have last year's model of the iPhone Pro Max, whatever it's called. But almost always the demand comes in a little bit lower than expected, and then Apple takes a hit as a result of that. That being said, there's also a lot of risk going on right now with Apple on that setup. The head and shoulders is a little funky on Apple just because there was such a large gap. It's not as clean as it is on some of the other tickers that are more semiconductor specific, but ultimately what you've got here is a gap down. So I'm going to go ahead and mark, just so y'all can see how I do this too. I'm going to go ahead and mark this gap. I could use the indicators to do it, but I typically stick with my legend that you can see over on the Discord. So purple dotted line equals a gap. This is a gap from the overnight or over weekend daily candles. And when that gap gets filled, I'm not saying gaps always get filled, but historically they tend to get filled, then I'll mark that as solid purple, similar to what you see here. For the time being though, I mark it like that. Curious to see how this plays out, because if you look here at the 4-hour chart, Apple actually had a bear flag going on here. Reason why, again, like I mentioned on one of the videos last week, I always look for confirmation, especially on bullish breakouts and setups on tickers like Apple and several others, is right here you could arguably say that's the inverse head and shoulders. The thing with patterns is all the patterns are relevant until, or they're not relevant, I should say, until they are confirmed with the actual break and confirmation to whichever direction that pattern plays out. So here we actually had a bear flag that was going on. When we broke down, here's your flag going on here. The flag is here. This is the flagpole, I should say. And we broke this support level here around that 220 level. And that was a bear flag breakdown. It did retake it, so it didn't have confirmation. If you look, I tend to look for confirmations on these bigger breakdowns on the daily and weekly time frame. So while it broke down initially right there, it recovered and it pushed back above, right? So what I'm looking for here is to see how Apple handles this. We could see some upside movement, could retest this resistance level. Interesting thing on Apple here is it's actually broke down and it's closed below that 216.50 level here. So I would not be surprised at all to see this measured move. I moved it a little bit there, but you can get the idea. Play out to where we go and we move into this range. Minimally, we probably test that 213.12 support. So keep an eye on that with Apple. I trade both ways, right? Y'all saw that on QQQ today. I'll show that example here in a minute where I traded puts this morning, made huge gains on those, then trade calls this afternoon, and I'll trade whichever direction makes sense. But you can see here I had the green marked as well. That was if we had an upside breakout. We didn't get it. So right now we're in the downside movement going on there. Jump over to QQQ real quick and then I'll get to SPY. So QQQ. I'll look at the daily chart. See here, I'm going to delete this just so that it's not in our way. And those dotted yellows there, those are minor support and resistance levels. So I mentioned this over the weekend. I'm going to mention it again here in the video. So QQQ, I know everyone is hyped and bullish, but again, your top weighted contributors for QQQ and SPY are driving QQQ and SPY, not the other way around. So when you've got big tickers like Apple, NVDA, several others that are actually top weighted tickers in QQQ, when those drop, QQQ drops, right? So I'm watching this larger time frame head and shoulders here. I would love to see bullish breakout and everything, but ultimately I'm keeping an eye on both setups. Also, key thing to watch here on QQQ this week with the Fed interest rate decision. Notice this downtrend line formed from the high, this right shoulder, which is our lower high, and then right here, if I zoom in, you can actually see that we tagged that downtrend line and rejected this morning. So while I do say that the top weighted contributors are driving the indices and not the other way around, QQQ being so heavily weighted with tech tickers tends to respect the lines really well overall. And those of you that are in the Discord know that I'm non-stop monitoring the top 10 tickers for QQQ at any given point. So that being said, we've got here rejection at that line. There's still a bull flag setup going on here on the 1 hour and 4 hour potentially. So this would be your flagpole. You can see it going on here. That being said, the larger trend at the moment that we're fighting against is a downtrend. Also, to make things a little bit worse for QQQ here, aside from that trend rejection that I called out here, you also have this larger time frame uptrend that QQQ was in, right? That we saw the breakdown from here with the whole Japan carry trade situation. Then we recovered, we formed this, and then as you can see here, we broke that trend again. Now we're about at that trend line again, so this trend is an important trend line. I'm watching that level because ultimately if we reject at this trend line again, that's not going to be good for QQQ. So I'll keep watching both directions on this. There's still a gap up here at the 493 level to the upside that we could see filled. To the downside on QQQ, The measured move, if that neckline was to break in this area right here, that dotted red line, that's your neckline for this head and shoulder setup. As crazy as it sounds, the measured move for that head and shoulders breakdown puts it in the 383 range. So something to keep an eye on. I'm not like loading puts heavy for that setup. It's one of those things that I'm keeping an eye on as we proceed. Ultimately, there was a lot of bullish momentum last week, but that wicking there and rejection at the trend has been a little hesitant and wanting to watch a little closer. I won't swing calls on setups like this until we have confirmation of breakouts, just because the risk is too high. I know that a lot of people will tell you buy calls, average down, keep averaging down until there's a actual confirmed reversal and a change there, and I'm not going to fight an overhead level of resistance, then I don't enter. I'll wait. Patience pays. So I'm going to jump over to SPY real quick. So SPY, you can see, looks a little bit cleaner from a breakout standpoint, or is attempting to. There's a few things to keep an eye on with SPY here. So jump to the 4 hours so you can see the actual highs a bit better. So we're looking for a higher high here. See how that plays out. Alternatively, there's also this trend that you want to keep an eye on here. I don't have a trend line marked. I need to go in and remove some of these minor levels of support and resistance as well, just to make things a bit cleaner. Y'all know we trade multiple time horizons and everything, so that's why those dotted yellows are there for when we were trading in that range. But ultimately, right now, what we've got going on here with QQQ is uncertainty. So that's a bull flag. We could potentially break out to the upside. It'd be great if we did. That'd be cool. There's a little bit of inverse head and shoulders setup going on here as well. I think a lot of people are waiting to see how things play out with the Fed interest rate decision this week. Whether it's 0.25 or 0.5, we don't know. It doesn't really matter. I'm going to trade and react accordingly either way. As of right now, the premiums are pretty jacked on a lot of the options. One thing that we were talking about a little bit in the Discord earlier today was the impact of RHO or RHO, which is one of the Greeks that you have for stock options, and the impact of that on leap calls and leap puts. So a lot of people haven't had to worry about that very much. They've got used to this approach of just buying calls that are longer term on the dips and then eventually having gains. Well, that works fine whenever you have these extended periods of time where we're in a prolonged uptrend and interest rates are held high at a constant. The problem that you have now is that if interest rates start dropping, that actually negatively impacts the premium of those options due to RHO. So something to keep in mind as you're buying leap calls and leap puts. You'll notice I haven't loaded heavy on leap puts or anything like that, or leap calls. I've just been very careful about certain tickers that I'm doing that on and taking small positions at the moment. So right now we've got uncertainty. We want to see what plays out here. Tesla, since multiple people are asking about that, and y'all know that I trade that all the time. I'm long on shares and sell covered calls in this range and this range. So as of right now, what I'm watching on Tesla is to see this short-term uptrend thing we got going on here, to see if that breaks down to the downside. So typically Tesla, especially when you have an event several weeks out, and we have the Robotaxi event on October 10th, typically the large funds are selling covered calls with spike premiums on the pumps, and then they either trade it flat to burn those premiums and theta decay makes them expire worthless, or they buy to close those calls whenever the theta decay basically drops the value of it significantly, which is what I've seen me actually do on several Tesla covered call positions. For instance, when we entered back up into this zone at the beginning of September, right in here, I sold 230 strike, 1018 covered calls. Sold 6 of them for, let's see what the prices were that I sold those. Starting at around 1665 to 2263. So I got $1,600 to $2,200 in premium, give or take. from each of those covered calls that I sold. Nice thing was after we rejected there and hit there, I actually bought to close several of those for under $1,100 each. So that works out well. I've done that many times over the last 3 years. So you can be bullish on Tesla long term. I like Elon. I'm bullish on Tesla. That being said, I'm still going to hedge my long share position, and that's how you accumulate larger numbers of shares over time. To be able to do things like that is by hedging and generating passive income on the side while you're doing it. So that being said, watching here closely, because a lot of the events for Tesla, especially something like Robotaxi, there's a lot of risk of a sell the news event that comes into play with that. So I'm keeping a close eye on it. I'll keep on selling covered calls. I'm not swing trading Tesla calls to the upside here. The risk to reward is not worth it to me. Basically what I mentioned last week. I just got another alert about the whole Amazon CEO telling Jeff Bezos, but telling people that they have to return to the office 5 days a week, which a lot of companies have been doing. Not mine. So anyway, sorry, squirrel moment. But Tesla, I'm watching this closely. It keeps failing to push and break out of that zone. So what I'm looking for here, you've got a rising wedge going on, which we've seen time and time again with Tesla. It's also starting to form a head and shoulders here. I know that y'all probably don't see that. It's something that the more you trade and the more you watch some of these stocks, it stands out more and more. But what I expect on Tesla is the same thing until something changes, like I mentioned a couple of weeks ago, that we keep seeing these big bullish moves, it seems like intraday and intra-week, but then when you look at the monthly time frame, over and over again, we get those big moves to the upside. A lot of retail traders yell Tesla to 300, right? Because, oh, we broke out of the downtrend. And that right there is right where I sell covered calls almost every time, because it seems like we always seem to do it heading into something like earnings where IV is spiked high. And in that situation, as an option seller, is ideal for you. So I know that several other guys on the Ethical Trading Discord also sold covered calls with me when we were heading into that last earnings. But what I'm expecting probably again here, unless we see confirmation of a close at the end of the month above that downtrend line, which technically from a breakout standpoint, that would be a clean actual technical setup, right? Because you've got breakout of downtrend, retest of downtrend, and then continued movement of that breakout. That from a technical standpoint is a clean move, but the problem I have right now with Tesla is we've seen that same setup multiple times that you could actually go back and look and draw the lines again that I've removed over the years. But if you draw the downtrend lines where we broke out on the weekly even, and then we reject back under, until we actually have a confirmation of more than one monthly candle closing above that downtrend line, I'm assuming continued downtrend. There's a lot of uncertainty and skepticism going on with Tesla anyway, so it's not worth the risk for me to trade calls to the upside. I know you can make big gains on calls on those moves like what we saw the last couple of weeks. For instance, I know some people that made solid gains like on this move right here last week, which is cool. That's fine. But the problem is most retail traders get greedy and sit in their calls and then hold, and then woke up and lost all their money on those calls on that Friday whenever we dropped hard. So be careful, trade smart, don't get greedy. What I practice on a lot of my trades, and I mention it to a lot of people, is trim to cover your cost basis at the first opportunity you get. If you want to ride runners longer at that point, do so. That's how we trade QQQ and several other things today. Real quick, just for that example, because I traded 0-day expiration calls and puts today on QQQ. They scare a lot of people, but sometimes they make sense, and if you're trading them with a very small position, then that's where it can make sense. There's nothing wrong with trading high risk options like that as long as you're not YOLOing your whole account on it. So I was looking at the 5-minute because I like to look for breakouts and confirmations on the 5-minute, 15-minute. But earlier this morning we entered put straight away because I saw the rejection at a supply zone. So those first puts that we were in were the 469 puts, and those went 102% gain. Then we entered again on some 472 puts after securing gains on the first one. So once we had rejection that second time, we entered those 472 puts. Those went to 129%. I locked the gains on those as well. And then I saw the consolidation here and a bounce at support, followed by a couple of inverse head and shoulders setups that we had on smaller time frame here. So I didn't like how flat it traded. The call options were burning up pretty bad at this point. We still netted 50% gain potential off of the 474 calls that we entered right in this zone. But I don't like that. Like, I don't like trading those types of trades where we're sitting in it and you're at a situation where you're basically having to hope whether or not it plays out or not. So again, if it's a super small position and you're okay with the risk of that very small position, that's one thing, but don't YOLO accounts on stuff like that. Same thing for weekly options expirations. Let's see, I think I covered most of the charts that people requested in the Discord. Real quick, because I know people had a panic attack this weekend over Bitcoin. I actually was going to short it with a leverage 20x or 200x position on futures, and I didn't, although I wanted to. So I'm watching this pretty closely right now. I'm long on crypto. I've been since 2017, so I know some of y'all have seen some of my holdings and probably are wondering why I don't freak out whenever I watch it fluctuate as much as I do. But again, I've been in it since 2017, and 2018 through 2019 were a whole lot worse for some of us mentally than right now. So I think I've become callous to the movements of Bitcoin and Ethereum and all the other cryptos. It's still a bull flag. It's still a solid bullish setup. Like I mentioned on the video last week, a lot of this is going to come down to the election. Harris, I don't think is going to be a negative thing for crypto, but I can tell you that Trump's going to be a positive thing for crypto. I don't care who gets elected. I'm not going to make it a political thing whatsoever. But ultimately, we'll trade accordingly. I remain long, and then I hedge my long positions accordingly. So, yeah, going with that. I'll wait on going through some of these other tickers, with the exception of SoFi. I was going to touch on that because someone else asked me about it, and we had been watching the inverse head and shoulders setup on it. So we actually entered into calls as well as shares over in the Discord. I've been watching this inverse head and shoulders going on here. It's very clean, and ultimately the interest rate decision probably is going to have a positive impact on SoFi and some of the other smaller finance and lending companies that we have. But right now I'm watching this inverse head and shoulders for a breakout above this neckline here. We still have had gain potential already, so I mean technically someone could probably trim their position here to cover their cost basis and ride the runners. That's never a bad idea. That being said, I think majority of us are in options that are at least January. I know quite a few of us have the $10 expiration January calls for SoFi. Same thing going on with Palantir. So I'll glance at that one, then we'll call it wraps. But yeah, watching that set up. There's smaller time frame charts over in the Discord if anyone wants those. So Palantir, this is one of my favorite longs. Beautiful bullish megaphone breakout that we got going on here. People will try to short stuff like this just because, oh, it's ran hard, it must be time for it to pull back, and that's not the way to trade. People take that same approach with upside movement and downside movement, and I won't trade that way. I look at the technicals, and I'm looking for a setup that makes sense to go either direction. So as of right now, lots of bullish momentum. We shorted it, sure. Right here when we broke this off the supply zone and then hit that support level and closed the short position and then entered some fresh long positions. So don't be scared to trade both ways, especially if you're long on shares. Feel free to hedge accordingly with covered calls or through shorter term puts that hedge your amounts accordingly. So still watching Palantir. I'd like to see it break out more and push further up, but I think that's going to be sort of contingent on things with the Fed or interest rate decision. So like I said, just wanted to do a quick touch base. If anyone does have requests for certain tickers they want me to do analysis on, even if it's some that we haven't been trading, feel free to drop that over in the lounge channel on the Ethical Trading Discord, which is free, by the way. You can find a link down below in the description if you want to join. If anything else does come up and you need assistance, feel free to reach out to me. Thanks.